Okay, so we're recording it now. Okay.
Do we need to bring any audience, any people? We could potentially tap our community. I haven't announced that, but maybe they'll join if necessary.
This was set up as a meeting and not a webinar.
Okay.
Happy to set up a webinar and invite your community if you want some of them to come and ask questions, because that's kind of a big part of the show is the Q&A.
Sure.
But fine, just doing the having you have the presentation and then just editing that in, but using it when I write up the blog post.
Sure. Okay, can you allow to screen share for me then?
Yeah. So let's see. Okay, now you should be able to screen share.
Yeah. Okay.
Okay, so I'll just start off and say, and now I'd like to introduce Gregory Klumov. What's the correct pronunciation?
That was correct.
Okay, Gregory Klumov with STASIS. Okay?
Correct.
Okay, so we'll start in 3, 2, 1. And now I'd like to introduce Gregory Klumov with STASIS. Hey, Gregory.
Hello, thanks for having me.
Happy to have you. And where are you dialing in from today?
Malta.
Ah, awesome. How's Malta?
It's been quite a hot summer this year.
What's the population? I mean, it's a small place.
Yeah, it's like 400,000 people living here full time, but 2 million tourists used to come and go every single year. Now, due to COVID, obviously, much less people came, so it was quite relatively quiet summer.
And I assume you moved there for the regulatory environment?
I was a part of the task force that helped local government better understand this technology and license it. So far, no single license has been issued, but we prepared a solid framework and they're starting to work on it. And as this licensing regime goes live and they accrue more startups and use cases, they'll probably start issuing licenses. But so far there is a grace period where the crypto startups who applied for a license can operate.
Okay, terrific. Well, great. Well, you've now been made a host, so you can share your screen and your slides.
Sure. I don't have slides particularly, but I have a couple pictures and designs, interfaces that I wanted to show up. So basically, what we did was a stable coin, which is backed by Euro cash. And as our community learned by this time, I guess, that stablecoin is not really business. It's a product around which a lot of businesses could be built up. But there should be some third party like ourselves, like other companies who issue this stablecoin and provide transparency to the community with the asset side of the balance sheet, because liabilities there are on the blockchain. It's very easy to see what's happening with the tokens, what's the total amount in circulation, where are these tokens moving, who holds them in terms of the addresses. But the balance sheet asset side is the question, or it's the issue, how to bridge that gap between basically digital economy where everything is transparent and open source and publicly accessible, and traditional capital markets. So I strongly believe that as any industry and any new market that will start being priced in dollars, stable coins are not an exception, and crypto markets is not an exception. So we're currently witnessing the monopoly of the dollar stable coins on the market. And that has been the case for every new single market for the last 100 years, just because US dollar tends to be the global reserve currency. All new interesting ideas, projects, assets being priced in this particular currency. But going forward, I see significant role of alternative currencies in the crypto world as adoption among European Union communities and other countries picks up. More people will have their native balance sheet currency as an extension of their journey into crypto world, and that's why I think the market share of non-dollar stablecoins will continue to increase, while the dollar stablecoins market share will gradually decrease. And also there is a significant competition among the dollar stablecoins, which has clearly a couple winners. One is the company that was never audited and nobody really knows how many assets they have. And second is a US-based basically conglomerate, which has a partnership with the biggest US centralized exchange. We are
so a couple. I mean, what's interesting, obviously, from the point of view of Tether, is that even though nobody really knows how much Tether is there or how much is backing the Tether that has been issued, nobody really cares.
It's not true, because if you see the borrowing rates on Tether are much higher than on other dollar stablecoins. Some platforms do not allow to use Tether as collateral because they don't trust it. So it's all a question of a credit risk. In the traditional markets, there is an instrument called credit default swap. It's a derivative that allows you to price the credit risk of a particular counterparty. In crypto markets, there is no such thing just yet, but once we see the growth of usage of the lending platforms, suddenly we see differentiation. The market clearly diverges. It allows a much smaller interest rate in verified or transparent stablecoins relative to Tether, where the interest rates are much, much higher. And that's basically an indication of a credit risk embedded in this product. It's just when people use it for 1 hour or 2 hours, they're playing the music chairs game and they think nothing will happen with them during the time they are exposed to this asset. But longer term, the whole different dynamics and the credit analysis kicks in.
So when you say that there's a higher interest rate, so if I want to loan somebody Tether, or I want to borrow Tether, if I want to borrow Tether, I have to pay a higher interest rate to do that?
Exactly. This is the indication of a higher credit risk, because when you borrow an asset that is mispriced or that could depreciate in price, the lender obviously adds those risks into the price he charges.
So this is if I want to use Tether as collateral.
Or if you want to borrow it to do margin trading, for example, if you want to buy some Bitcoin and then leverage your position and borrow more Tether to buy more Bitcoin. If you don't trust, for example, centralized exchanges, you can use decentralized platforms to borrow more stablecoin, collateralizing this loan with your Bitcoin.
Right, but I'm just trying to understand, if I'm borrowing Tether and Tether has a higher probability of going down, wouldn't I pay a lower interest rate?
Exactly, but that's why the lender, the guy who lends you those particular assets, he tries to take that into account and charges you extra. In situation that this asset depreciates in price, at least he keeps a higher of an interest rate for a while. Again, in crypto, everybody is concerned about liquidity. Nobody's really worried about the credit risk right now. Everybody thinks they can exit the position before it goes to zero or to kind of cents on the dollar. But I was a hedge fund trader for more than 15 years, and I seen during the 2008 crisis where instruments backed by the prime real estate in the United States collapsed from 100 cents to a dollar to 15 cents on the dollar, and nobody could stop that. So it's something that a young market just doesn't understand, and there is not enough institutional capital yet to force it to understand.
And why don't you think that there have been stable coins? I mean, there have been stable coins that are obviously issued, in all kinds of, different currency backed or gold backed. And why don't you think any of them have really taken off to the degree that the US dollar backed have yet? Do you think that it's just time that will make that happen, or do you see some event happening that will trigger that?
Well, you are right. There were more than 250 stablecoin projects announced. Even in euro terms, there were more than a dozen of projects announced. It's just really hard to execute on this product, and very few people understand that the actual business is not behind the stablecoin itself, but behind the services around the stablecoin can offer. So managing just the stablecoin is not really a lucrative business, but creating products and services that uses these stable coins is the opposite thing. So most projects were focused just on launching their own version of Tether and failed massively because there is a significant first mover advantage. But to your point, we managed to outcompete all other euro stable coins, and there were quite a bunch of them. We are the biggest by far, by size of the emission, number of total transactions, users, and wallet downloads. Our community totals more than 50,000 people right now. And I think the biggest success factor was the ease of access to this asset. So we started with the stablecoin wallet. It's available both for Android and iOS, and it's a non-custodial solution to send, store, receive, exchange stablecoins, including EURS, of course, and two main digital assets, Bitcoin and Ethereum. And what we did was that we introduced the delegated transfer concept. It's a feature that allows you to send stablecoin without worrying about gas. So you can pay fees in the stablecoin itself by accessing the blockchain transfer method, and you don't need to worry that on top of the stablecoin ownership you need some gas on top. So now there are projects that are realizing the same concept. For example, Argent is a wallet that made the whole pitch around the gas fee experience, or Circle recently announced that they will allow USDC version 2 where there will be basically an option to withdraw commission in the coin itself, not paying the gas fees. So yeah, this is it. They would just recently announce it. So that is basically a user simplification feature that allows customers not to worry about some gas fees, but just to pay fees in the asset they're sending.
When you look at the transactions, what are people using the stablecoins for?
Mostly for exchange-to-exchange transfers, for private transfers. Some store it as a shield from negative interest rates. Some use it as an on-ramp and off-ramp to crypto exchanges and DeFi protocols. So what we did after the wallet is we introduced the APIs, open APIs that are publicly available, and they allow anybody to have literally a checking account in euro. So one of the APIs implementation is our sellback interface, where anybody can create an account and buy and sell unlimited amount of EURS after they pass KYC. If they don't pass KYC, they still have an option to buy and sell the stablecoin using both wire transfer and the card. Visa and MasterCard transactions are also available. So zero KYC account allows 250 euro worth of transactions, but we will be increasing that to 1,000 this month. We figured out a way to increase this non-KYC limit to 1,000. And that opens up a whole use case of e-commerce applications, because right now even people not from crypto world can buy and sell something online, and then they can acquire cards, accept payments with cards by accepting this stablecoin using just an API. You know, like the powerful thing is it's just an API they need to plug in. You don't even need to have any legal entity. They don't need to onboard anybody anywhere. They just need to plug in the APIs and they're all set. They can run businesses and they can transact on internet, accept cards, accept wire transfers, and get paid.
So what does a roadmap look like for the coming year? What kind of new innovations are you going to be bringing out?
We're definitely exploring other blockchains at this particular moment because of the significant gas fees, as you know, right? So DeFi applications clogged the market with by raising significantly gas fees. So say if somebody walks to online store and tries to buy something with his card, and small transactions will not make much sense, right? Because in order to send 100 EURS or to pay something with 100 EURS, there is a fee that acquirer will charge of just 1.5%, but then there'll be a network fee, right? Which will basically ruin this whole concept of fast, instant settlement and cheap acquiring. So before those high fees, we were really competitive with the traditional acquiring firms, which sometimes acquire for 5-6% fees, and not just that, they wait up to 30 days to release the funds to businesses, to merchants, right? We can offer this interface, and it's available for free to acquire cards. For European cards, customers will be just charged 1.5%. Now, since the blockchain fee has increased significantly, we're looking for the ways to partner with other blockchains to provide a better user experience and lower those fees, transactional fees.
What blockchains are you most interested in at this point?
I can't currently tell because those plans aren't public yet, but you can expect some news by the end of the year.
And what do you think we'll be talking about in stablecoins? If you're to be on the show next year, what do you think we'll be talking about in a year that we're not talking about today?
Well, DeFi farming is definitely a great experiment, which is taking off and has been taking off last couple months. People think it's in a bubble. It's nowhere near a bubble. I remember Cardano was trading at 30 billion, 30 valuation, having just a white paper. So most of the DeFi protocols still trade 500 mil to a billion with having like those assets actually in custody, you know, in those protocols. So it's nowhere near a bubble. If you want to see a bubble, look at Tesla stock price. So I continue to anticipate more experiments with the DeFi protocols like lending, borrowing, flash loans, reputation loans, more yield farming, better products, second Uniswap, third Uniswap, more derivatives on-chain and off-chain. And this is quite an exciting time for DeFi because it operates in a non-custodial fashion and it's really unstoppable. So there is no a single point of failure which could be attacked. And there is a significant traction. These projects are picking up. So I anticipate that in the next 6-9 months, we will see winners among those projects, and those market values will be far above what they currently trade at.
That's super interesting. So then the last question I'll ask is, what is it, you know, you've talked a lot about Stasis, so thanks a lot about that. If you want to repeat something, that's fine as well. But what's the one thing, you know, if you want, that people should take away from the call here about Stasis?
We're the most
the one kind of macro, you know, selling point.
Sure, we are the most transparent and the most institutional friendly stablecoin on the market. We are the only project audited by a top auditor. And from day one, we wanted to lower the credit risk of the counterparty we are offering to the market to the lowest possible way. So transacting with STASIS, you can be sure the credit risk of this counterparty is the minimal among other entities and other products, and we are here to stay to keep that to keep it low and to keep the market convinced. We have all the necessary tools and resources to continue to execute on our strategy.
Okay, well, terrific. Great. Thanks a lot for coming and spending the time with us here on Stablecoins Are Killing It. We look forward to checking back in a little bit and seeing how you're progressing.
Thanks for your amazing show.
Okay. So I'll edit it there, obviously, and